Hello everyone, welcome back to our Legal Talks. Now we are discussing a very important topic, that is ESG and IPOs, the new investment equation. ESG stands for E for environment, S for social, G for governance. Environment, social and governance. And IPOs, initial public offerings. So today we are diving into a game-changing trend that's transforming the IPO markets. ESG factors. Whether you are a startup planning an IPO, an investor tracking the next big opportunity, or compliance professional, stay tuned till the end. So, what is ESG? Understanding the three pillars first. So, let's break down ESG into three components. E for environment, there is carbon footprint, energy usage, waste management, water conservation, and climate impacts. And S for social, so that is labor standards, community impact, DEI, that is diversity, equity, inclusion, data privacy, and employee well-being. And Z for governance, which includes board independence, ethical business conduct, transparency, shareholder rights, and risk management. So why this matters? ESG goes beyond compliance. So it is about building a long-term value. So why ESG is gaining importance in the markets? So the investors, especially millennials and institutional funds, are now prioritizing sustainable and ethical businesses. According to Morningstar, the global ESG fund flows crossed $3 trillion in 2024. ESG in IPOs. Why it matters today? With BRSR update, regulatory compliance pressure, SEBI's 2024-25 BRSR core mandate. SEBI has strengthened ESG reporting norms with the introduction of BRSR core, a subset of key ESG performance indicators. In financial year 24-25, SEBI mandated top 1,000 listed entities in India to implement the BRSR core framework and disclose ESG information for their value chain with a specific changes to the assurance requirements. The BRSR core framework introduced in 2023 requires a reasonable assurance on 30 key parameters across 9 ESG categories, ensuring the reliability of disclosures. SEBI also mandated green credit program details to be included in BRSR reporting for the financial year 24-25. The key changes and mandates are BRSR code. The BRSR code framework established in 2023 is now mandatory for top 1,000 listed entities. This framework focuses on 30 key parameters, 9 ESG categories, requiring reasonable assurance to ensure the reliability of the disclosures. ESG disclosures for value chain. Top 250 listed entities must disclose ESG information for their value chain, upstream and downstream partners, both. Assurance requirements. The requirement for assurance was changed to assessment to reduce compliance burdens. Value chain reporting. Reporting should cover partners accounting for 2% or more of the purchases or sales. Green credit program. So listed entities are mandated to disclose details of their green credit program in their BRSR reports starting financial year 24-25. Voluntary approach. Reporting should cover partners accounting for 2% or more of the purchase or sale. Green credit program. Listed entities are mandated to disclose details of their green credit program in their BRSR reports starting for financial year 24-25. Yes, we have discussed about voluntary approach for 24-25. Reporting of previous year's ESG data for the value chain is voluntary. And if you see the industry standards, SEBI issued industry standards and reporting of BRSR code to facilitate standardization and ease of implementation. So overall, BRSR code mandate for 24-25 aims to One is transparency, promote our consistency, and encourage best practices, protect investor interest. So ensure transparency means companies must disclose their ESG performance and impacts. Consistency means the BRSR standards provide framework for consistent reporting across different industries. Best practices are the regulations encourage companies to adopt sustainable and responsible business practices. Protect investor interest. So by requiring ESG disclosures, SEBI aims to protect investors by providing them with the information about the sustainability of the listed entities. So what are the key features of BRSR code? We'll discuss on the key features of the BRSR code. Quantitative ESG KPIs such as energy intensity, water usage, gender diversity, median wages, turnover from sustainable products. These are all quantitative ESG KPIs and mandates reasonable assurance from third-party assurance providers for select ESG metrics and ensures comparability, consistency, and investor confidence in ESG disclosures. So SEBI aims to curb greenwashing and promote standardized and assured investor reliable ESG metrics. So we'll discuss on examples of ESG in action, case studies and trends. We see Tata Technologies IPO in 2023 focus on EV innovation and clean tech. Clear ESG strategy helped attract global ESG funds. Another IPO, Nykaa IPO, strong emphasis on women empowerment and social equity. Attract gender diversity focused on ESG investors. Now the industry trends, sectors like renewables, fintech, biotech, and clean energy are ESG favored. Traditional sectors like mining and oil face investor pressure to transition sustainability. So ESG and innovation, driving new business model. This is the new business model. ESG is not a cost. It is a strategic investment. ESG driven innovation includes sustainable packing, ethical sourcing, AI-powered risk and compliance tools. Many IPOs now include ESG metrics in their pitch decks and DRHPs, draft ready prospectus. So the future of ESG in IPOs is the predicted trend with BRSR code. SEBI may extend BRSR core assurance standards to IPO bound companies through a future listing regulation update. SEBI may extend BRSR core assurance standards to IPO bound companies through future listing regulation updates. IPO bound companies in high emission sectors like oil, cement, energy may face higher scrutiny and ESG screening by lead managers and institutional investors. The cost of capital will increasingly be linked to ESG transparency and assurance. So how the companies can prepare now? So pre-IPO ESG assessment, map your ESG indicators to BRSR core metrics early. ESG data governance, build systems to track and report ESG KPIs with the audit trails. Third-party assurance, appoint SEBI recognized assurance provider to validate key ESG data, aligning with BRSR code. Disclosure in DRHPs, highlighting ESG alignments and disclosures in DRHP to attract ESG concise investors. Stakeholder training, ensure board and compliance teams to understand ESG framework and responsibilities. So now invest in sustainable future. As an investor, choose companies aligned with your values. Research ESG ratings from trusted sources like MSCI, CRISIL, or Morningstar. So for founders, remember, capital markets are now rewarding transparency, responsibility, and sustainability. So if you are planning to go to public or investing in upcoming IPOs, don't ignore ESG. It's not just about compliance. It's about staying competitive and building a future-ready brand. The future IPOs is not just financials. It's a sustainable, responsible, and transparent. Whether you are raising capital or investing, ESG plus BRSR is equal to market credibility plus investor trust. This is a formula. Don't forget to like, subscribe, and hit the bell icon for more content on IPOs, SEBI, startups, ESG, and corporate laws and insolvency updates. We have two channels, RR Corporates, other channel, RR Legal Talks. Please do subscribe RR Corporates and RR Legal Talks for updates. Thank you.